Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Excuse me. This should be another exciting week. Last week saw some weakness in commodity prices, so a lot of the buy recommendations are kind of hanging on, which offers opportunity, especially in the metals. But I do have a rating change on Antero Resources. As you know, I am bullish on natural gas and Antero Resources being 90% natural gas oriented is one of those. And I'm going to go from a buy to a neutral. And one of the reasons was that last week with natural gas up, I don't know, 10 or 12%, Antero Resources barely budged, and that doesn't make any sense to me. But plus, I don't want to have too many buy recommendations in one group. In this case, natural gas. So let's get into it. I'm going to go over all the recommendations here. So here's natural gas. I will attach my initiation buy recommendation because you should see the long-term chart on natural gas. Because the potential upside is massive. And I know they're using this stuff in AI and all kinds of new things. And it's cheap. It's cheap energy. So I think it's only going to benefit. This is UNG. This is the ETF that you can trade that mimics natural gas. And so actually I toyed with going to a neutral rating on this today, but I'm going to leave it. But I'm expecting a correction back down here to about 1125, 1130, and we're at 1193. So I want to say it's like 7% or so that this could correct. We have a confluence of moving averages in the form of a rainbow convergence. And so I would not be surprised to see a test of that. But on the bullish side of this, why I don't want to do that and have the first hour of trading, it hit 1130 tomorrow, and then me not being able to get back to you, and then it ends up the day, up 10% or something, is that we're entering a third wave here for natural gas. And according to the Elliott wave theory, third waves are the most powerful, they are the most profitable, in uptrends, they can be the most devastating in downtrends. But if we are entering a third, this would be the second wave, would be the correction here. As you can see, we got 1, 2, 3, 4, 5. So this is possibly the top of wave one. And then we get a correction, which would be our wave two. And then we'd enter our third wave, which would be off to the races, and something you definitely want to be involved in. So I expect some weakness in natural gas. Maybe it could be all day tomorrow or for a couple days, or it could be, a big drawdown in an hour and then rally off of that. I don't know, but I'm expecting a little weakness here in natural gas in the ETF UNG, but super bullish longer term. So here is Antero Resources, and really you look at this and it's been really hasn't gone anywhere while natural gas has spiked. And my guess is it's probably included in energy ETFs, probably in a lot of those, and people are selling oil, selling energy, which I think we're really close to a bottom in oil prices. That's another topic which I won't cover today. But this isn't acting well. And if we get a correction, this could go down more. I'm just going to go to neutral. I lose 2.69% from the buy rating here. It's minimal. And again, I will come back to this because the big picture on Antero Resources, it's in like a 3-year consolidation. And those big consolidations, when they do break out, if they break out, can be very profitable. So I thought about holding on with the stop and all of that, but then I'm taking a loss of 5% or something. So I'm just going to right here go to a neutral rating on Antero Resources, but I will be back at that. Here's a big opportunity, I think, right now is platinum, silver, gold, uh, uranium still in a consolidation, but the potential's there. But here's platinum. So, again, the Elliott wave theory. Here's where we went bullish initially, and went neutral, and then the thing shot out of a cannon farther. I thought this was the third wave was complete, but in case it actually ended up being way up here, this is a fourth wave correction. So we should have one more higher high. This split, I think it used to be 177 or something, but I'm expecting a higher high here north of 27, and from 17, that is a long way up. And you can see last week we had a bullet. Here's our stop, which I've raised from 16 to 17. And you can see last week our purchase price was 17.92. So I don't want to lose a lot, but I do think we're really close to a low here. People have abandoned the metals, chasing energy, and now I would be doing this. I would be doing the. I still think oil's going higher, but this looks good for metals. So last week, this is a weekly chart. So each one of these bars represents a week of price action. You can see we had a bullish hammer where prices started out at the high. It tried to sell off interweek and then ended back up at the near the high of the week. And we had another one back here about 3 weeks ago. So this seems to be a real important level. Does that mean it can't break and go down lower? No, of course not. But I was buying more on Friday, and as long as it holds 17, I'm a buyer. Silver looks identical. So here we bought at 68.39. We're at 68.33. We had some upward movement. I remember telling you on these up weeks, this is a weekly chart. Each candlestick represents a week of price action. I said sell some, sell some. And now I'm buying all that back and more. And so here we are with a $64 stop, and we're at 68. So the reward to risk is really favorable. I'm expecting a fifth wave to new highs, and that would be very, very, very good. Okay, so here is the iShares Commodity Index. This is really energy uh, heavy. It's 70% energy. It's got a lot of agricultural commodities, which had a pretty big down week last week, as most commodities did. I think the plunge team is in there trying to drive prices down by shorting some of these things. The plunge team is, of course, our government, but it happens with every administration. I'm not making a political statement here, but anyway, the true forces and gravity of the markets always take hold eventually. You can only manipulate these for a certain period of time. Anyway, here's my stop at 32. We're at 31.80. I consider that still a buy. It's not even 1% down. Would it be? No. So I don't want it down anymore on Monday or Tuesday. This really needs to get going, or I will go to a neutral rating on this. So that's where we're at. Actually, the chart of oil looks a lot more constructive than this chart does. Here's another reason. So this is intraday. This only goes back 2 months. So each one of these bars is 2 hours of price action. You can see on Thursday and Friday as we went down, we got higher lows on our relative strength index. So we ought to at the least get a bounce. We should, maybe fill this gap, maybe fill this gap, and then see what happens. But yeah, I don't want to be selling here when we're way oversold on a short-term basis and we have a positive divergence. Caesars Entertainment, it's acting well. It was up. This is a weekly chart. Each candlestick represents a week of price action. It was up 2% on the week, which is great. We have our stop down at 25. We initiated at 27.77. We're at 29. The bullish setup here is the bullish inverse head and shoulders pattern. It's like a man or woman hanging upside down. Here's your left shoulder, here's the bottom of your head, and here's the right shoulder, and here's your neckline. So if we're able to break above, let's say 31, this comes into play. This is intact, this pattern. And we'd measure from the bottom of the head to the neckline and project that distance upward, and you come up with 47.5, which would be a long way for us. So that looks fine. Sprouts market is right here on right near the stop. So this has to hold here. I don't want to see any more downward price action. This has the same patterns as Caesars Entertainment, a big inverse head and shoulders pattern. This is on a daily chart, so this is actually about the same size as what we saw on Caesars Entertainment. And the price projection, if we can get above 87.5, would be 105, which would be a really, really nice gain. Had a big down day on Friday. I'm not sure if somebody was selling. And so the way I see it right now is I see a 5-wave advance here. 1, 2, 3, 4, 5. So now we're getting an A, B, C correction. I hope, this could easily come down here and correct, but I will just take myself out of this. If we have, if we're down 1 or 2% tomorrow, I will really reduce my holdings to maybe, maybe I'd keep my minimum position and then see if there's something that I couldn't find a reason to get involved at lower prices. But again, the goal here, we still have a gain, so I don't want to give that up. So that is that. It still looks fine. This candle was telling. This was what they call a shooting star, where prices opened up, and then shot way up, and then somebody came in and sold the heck out of it. And that's a bearish pattern. So, and sure enough, it's followed a form, but it's had enough time to settle now that this should get going again. One concern I have is I think the market is going to have some weakness here, especially small cap stocks. So I have a lot of reasons for that I won't get into today, but that is my concern with both this and Caesars Entertainment. And Union Pacific, we're right on the verge here. Our stop is 260. We're at 262.64. We have a profit. So if this breaks, I'm out. The thing we had a bullish hammer on Friday last week, where prices opened up at the top of the week and then closed, and then intra-week went lower and then closed pretty much near where it opened. So there was some support there. I want to get a gain out of this. I don't want to take a loss. What I don't like, again, this is a weekly chart. Each bar represents a week. This is a gigantic symmetrical triangle, which has, a lot of upside left in it. That wants to keep me in the stock. But again, I'm all about making money, and I don't care, if it corrects farther, it doesn't mean that I can't get back involved. And you've seen me do that on some of the Antero resources and some other things. What I don't like about this is on these higher highs here, we got lower highs. This chart reminds me so much of Brazil, if you remember that. Same big 3.5 year pattern. On the weekly chart, we got negative divergences, and it's corrected. It's still correcting. I'm actually warming up to it again, but I'm not ready to step in yet. So, this needs to not go down a lot. It needs to turn around here. Thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Please like and subscribe. Thank you. Have a great day. Great rest of your weekend.